this morning, we're going to be asking our panelists whom we have in the studio. Mr. Wale Oluwade is the CEO of Growth Masters Consulting. You're welcome to Sunrise Daily this morning.
Thank you, Mokwe.
And we also have Professor Ken Ife, who is an economist. You're also welcome to Sunrise Daily this morning.
Thank you.
Well, we're hearing now $4 billion is what the federal government is asking for, and we understand that our loan portfolio stands at about 33 trillion naira, or $87.239 billion. And analysts in general worried because much as we've been told that is a debt to GDP ratio looks fine, we know that our debt to revenue ratio is quite worrying. When you heard this loan request from the president, what were your first thoughts? Let's start with you, Prof.
Well, if I may, I've just had a little chat with my colleague, Wale. For the benefit of our viewers, it's good to set out what the key parameters are on the legal side, on financial ratios, and then also on socio-economic, so that we are on the same page when we begin to argue, because this is a highly contentious issue. On the legal side, the Constitution says anything to do with borrowing has to be on the exclusive list. So we're all clear where it belongs. Then the second one is that there is a law that governs borrowing, which is Fiscal Responsibility Act of 2007. And then it does say borrowing, it doesn't say external or domestic, any borrowing has to be for capital expenditure and human resource development. It has to be a long term, it has to be on concessionary terms. And then it also expects an analysis, what they call benefit ratio analysis, cost-benefit analysis, and as part of this, so as part of the due diligence. Then you come to the financial ratio. The only one that the FRA 2007 set was fiscal deficit to GDP at 3%. We know we are at 3.6%. We know that the Finance Act is sorting that out, and then we know that the FRA 2007 is up for renewal. They're amending it right now. But it also meets, the law actually says within 90 days of passing it, that the president should, on the advice of the minister and with the approval of the National Assembly, set the ratios, which means debt to GDP ratio is not set. The debt service to revenue ratio is not set, and then many other ratios. So then, it has to be, and it hasn't.
Prof, just before you go into the technicalities of this, what I want you to quickly answer was when you saw that, when you saw the Senate President, I don't know how you saw it, maybe you saw it on the news or you heard it over the radio, what were your immediate thoughts? That's what I wanted to know.
For me, it is not unexpected. And that's why I'm giving you the background.
It didn't come
so that you can understand. No, it doesn't. Because until you understand where I'm coming from,
yes, are you expecting
my reaction is going to be different because I have basis for my reaction. So it doesn't come to me as a surprise.
So you expected
because let me tell you why it doesn't come as a surprise to me.
No, Prof, I'm trying to establish that you expected it first.
Oh, yeah, it's not the end. There's going to be more.
Okay. But we should expect more loans.
Oh, of course.
Okay.
But one thing you have to bear in mind is that in 2005, we were owing about $30 billion. 40% of that money was due to penalties and all kinds of infractions. But here, for 6 years, the government has been paying. It hasn't defaulted. And when you don't default, financial people will tell you, bankers will tell you, as long as you are keeping a clean slate and you are not defaulting, and then you are a resource-rich country, and, they just keep, one person is in charge of just lending. When you come to debt issues, there's another department that deals with it. So they just keep lending. That's why you have so many people ready to lend the money. So many, you've seen the list of the people who are prepared to lend, World Bank, they're all ready to lend because they have confidence that it's a resource-rich economy. They are not defaulted. So when they input your data on the computer, it says, go ahead and lend, and they keep lending. So it doesn't worry me that much. But there are areas that worry me, which is the ability to repay the money. And then the ratios, you look at the ratios, they're not very pleasant. But there are concrete action that the government is taking to actually give us more confidence. So we'll come into all that detail.
And I think that's a detail that is important to us.
Okay.
We might as well get to it.
All right. Now, the The government revenue to GDP is 6 to 8%. The average is 18%. We are the lowest in Africa. ECOWAS macroeconomic convergence criteria says 20%.
We've since established
So
that.
we should be doing 3 times more in
Prof,
revenue.
but
we are moving because the PIB or PIA now that was signed, you saw the inland revenue say, oh, we're going to get towards our revenue 10 trillion, more than 10 trillion next year. Isn't that a movement that we're now going to expect double that revenue? Then you've seen actions being taken, or presidential order 007, trying to get companies to get involved in infrastructure around them. Like you see Dangote and Bu are all using up to 50% of their revenue to do work to ensure that we're doing what needs to be done to make them more able to grow and then also pay more tax. Then you've seen the infrastructure company that is already capitalized with 1 trillion going out now to 15 trillion and is all in Naira, to now be able to take away all of this headache. The headache is infrastructure investment. Nigeria's stock of infrastructure is only 35% of our GDP. South Africa is 80%. Many countries are over 100%. So the deficit is there. The requirement, COVID is an existential problem. People were dying. So government has to borrow if it doesn't have the money. And in investment, when you want to invest in anything, you have to look for your saving. We don't have the saving, so you have to borrow.
Well, I can see Mr. Oluwade twitching almost to say something. I'm going to let him intervene on this matter when we come back from this break. We're talking about the economy now. This is as the president is seeking another $4 billion loan request, making it to the National Assembly and seeking their approval there. We still have in our studios this morning Mr. Wale Oluwade and Professor Ken Ife, who are intervening on the matter. Just to quickly mention that this is also happening as a National Bureau of Statistics, you might have seen it scrolling there, has released the inflation report. They say it has tapered by about 0.37% to 17.01%. It does look like inflation came down in the month of August. Well, let me quickly take your own intervention now. When you did see that request, that loan request by the president to the National Assembly, first thing as they resumed yesterday, I don't know, were you worried or did you think that, well, we need to do this in order to make progress?
Thank you, Mankwe. Yeah, I was worried, and while I understand the need for us to borrow to develop infrastructure because we have a huge infrastructure deficit, but I disagree with the federal government on the areas of investment of these borrowed funds. That's what gives me worries, Now, it also speaks to the issue of what is a definition of an asset for a nation. Are assets, roads and bridges and rails and all of that, or are assets the human beings? Used to the multilateral institutions, World Bank, IMF, they used to rate nations basically on GDP, solely. But later on they realized that GDP isn't a fair or accurate assessment of the strength or the growth or the health of a nation. So they now came up with the issue of human development indices. Let me use the analogy of a family man, who has money and says, because I'm under pressure constantly from landlord, to pay rent, I need to build a house. And so neglects, to fund the education of his children, saying they should wait. When I finish building this house, you guys will go to school. But then the house took 6, 7, 8 years, to complete. For 8 years, the kids didn't go to school. Now he's built this house. The kids have grown with no education, with no skills. What are they going to do? From the part of the country where I come from, a father who does that, the Yorubas will say, those kids are going to turn around and sell off those assets. Now, there are risks and there are implications for what the federal government is doing. What are the risks? Huge cost, interest cost. Huge, because what took us to the debt trap that we got into earlier on, that President Obasanjo wiped off, we're not just the loan stock itself, but accumulated, interest that we're unable to pay. We're finding our way back there now because don't forget, Maokwe, the basis of our ability to repay this loan is purely on one economic activity, which is crude oil. And the prices of the crude oil keeps fluctuating. We have no control over it. Another risk is that when you keep borrowing to fund infrastructure, you starve other key sectors of funds, human development, meaning education, healthcare, housing, and all whatnot. And thirdly, when you do this also, you starve funds that is needed to eradicate poverty. I mean, I could go on, not to also mention the fact that if you borrow to fund infrastructure, is governments, do they have the skills to actually build, maintain, and operate different infrastructure rather than using alternative avenues? Now, in the last 2 weeks, 3 weeks, 1 month, thereabouts, I've watched you almost every other day, every other week, interview National Association of Residents of Doctors, Johesu or ASU. Why are they going on strike? I mean, I watched you with Dr. Mori or Uyilawa last week, threatening that, okay, they're not calling off their strike, and the president should have just dismiss the Minister for Health and his counterpart in Labour and all of that. And I keep asking myself, what stops the president from just saying, because if I were in the president, should have just say, please call finance minister, can you just pay these guys? But how much exactly is involved? It's not up to 120 billion naira. But then there is no money. Because the monies that Nigeria needs to fund critical social issues, social assets. I mean, if we had not learned any lesson, COVID last year should have taught us a lesson. You know that our first line of defense is our healthcare, and it's zero. I mean, the SGF had said when he visited a couple of those hospitals that I didn't know that the state of the healthcare facilities in Nigeria were this bad. But then even after he knew what has happened, so there are risks and there are implications. I just told you some of the risks and some of the implications. So we're owing doctors. ASU, as of yesterday, one of the papers said ASU is threatening to go on strike again because federal government has been unable to meet the commitments that they entered into in writing because the funds are not available. The funds are being put to, developing so-called infrastructure. Now, let's go back to the issue of is the debt to the...
As you rightly pointed out, the infrastructure is needed.
Yeah.
It's also needed to kickstart and facilitate economic activity. We have been told that inflation is on a runaway because, the cost of transportation is high. Before goods can get to the market, especially farm produce gets to the market, all of this, is making the cost of food items balloon, of course, add to it the security situation. And for those who have been, in recent times, been able to take the new trains from Ibadan to Lagos, from Abuja to Kaduna, and a few other places where the trains are now working, there's a sense of excitement, a sense that something new is, a sense of new possibilities, so to speak. And even though there are huge questions as to our ability to be able to pay back the loans used for that train, what the government keeps saying is that they're hoping to kickstart economic activities along these corridors and facilitate it, that they believe that this is going to have a long-term impact on the economy. Shouldn't we be doing all of it at the same time?
Mankwe, I beg to differ with you. Now, it is true that the debt to GDP ratios for OECD countries, I mean, you could actually call the OECD countries a club of debtors because their debt to GDP ratio is almost all of them, over 100%. Actually, Japan is the highest with 257% debt to GDP ratio. But what is the secret? The secret is that, Japan, you watch the Olympics, you saw Japan. Japan doesn't look like a country that needs infrastructure anymore. The Human Development Index in Japan is so way high. Per capita index is huge. Now, but what are the key buffers? For you to go into this debt binging on debt as a nation, you must have buffers. Systemic buffers that immunes you, that insures you against risk, that insulates you against risks, from the volatility of shocks in movement of, prices and all of that. Japan, like I said, is purely an export-driven economy. In this studio, most of these cameras will be stunned if they were not from Japan. Now, that is one. Number two, Japan has 1.3 trillion US dollars raw cash in deposit. 1.3 trillion raw cash in deposit. Now, another critical factor is that Japan's tax to GDP ratio is 33%. The OECD average is 33%. The lowest is Mexico, maybe 16%. US is 24%. Now, if you disaggregate it further, of the 33% tax to GDP ratio, I mean, if you'll be stunned at the level of taxes that Japan generates. What is the tax to GDP ratio of Nigeria? We talked about this earlier on, 6.1. You know, the tax debate on VAT and all of that, you know, and everybody's going gaga about, oh, VAT. That's not even the issue.
But we have capacity to even widen it. We have been told to widen the tax net, not even to increase the taxes, but to bring more people into the tax net.
I've been a major proponent of widening. That's what I'm saying. Now, but that brings me back to the issue. If you have 100 million people living in extreme poverty, contributing next to nothing to this economy, what would a wise government do who is serious about, you know, I mean, this government 2 years ago promised to lift 100 million people out of poverty. Can you tell me of any coherent strategic master plan to do that? None, to the best of my knowledge. Well, because we should be, we should be investing massively in SMEs. We should be investing massively in poverty eradication. That is the focus.
You say, I mean, that's, I mean, I don't know whether Professor Ken Ife would disagree with you, but I mean, coherent master plan is your definition, is what you're looking for. We do know that there are plans towards lifting people out of poverty.
Okay, if there are plans, Mark,
just a moment.
Can you tell? Okay.
We've seen the social investment program, which, you know, was not existent before now. You might have issues with it, but these are the things that the federal government has come up with, at least at that level, and they're pretty novel.
Mark, a master plan to kickstarting this economy. We have a revenue crisis. That's the brouhaha. That's what all this brouhaha is all about.
Indeed.
So how do you do that? You have to grow the economy. And you do that based on tax revenues. Taxes. Now, how do you generate tax revenues? Through SMEs.
You want them to tax the SMEs that are struggling to survive?
No. Why don't you create additional SME clusters so that you have more entrepreneurs? I mean, we had a brief discussion. You have entrepreneurs coming in as SMEs, and then you can get more taxes from them. That is how you grow. See, our tax to GDP is 6%, like I said. The IMF says the minimum threshold for an economy that wants to experience accelerated growth should be between 12 and 15%. Nigeria is way below that, 6.1%.
Okay, let me quickly bring Professor in here.
I do respect much of what he said, but if we are keeping the discussion around debt and debt sustainability, you wouldn't borrow money to pay salaries to sort out the issues around people going on strike. You couldn't borrow. The law doesn't allow you to borrow money to pay salaries. The reason why advanced economies are violating the benchmark of 60% debt to GDP and Japan going as well as 250 is simply because they have high infrastructure. In other words, their stock of infrastructure is so high. They are investment, there are $9 trillion sovereign funds available looking for where to invest. They won't come to Nigeria that doesn't have the infrastructure. They will go to that same Japan where there are infrastructure, irrespective of their debt, and put their money there. So that's very important. You know, the infrastructure is what drives investors wanting to come into your domain. Then the other issue is about the tax. Now, Nigeria has on paper the lowest tax in Africa. But when you look at implicit tax, you find out that we are the highest. Now, what that means is there are studies that show that 60%... No, I'm coming to it now.
Implicit tax.
I'm coming to it. There are studies that have shown that 60% of manufacturers actually say that 90% of the time they are providing their own power. So the cost of providing power is with them. The cost of building borehole and roads that connected is they are carrying the burden. So the implicit tax is all the whole burden, tax burden. We're the highest. So now, also, there are 90 million MSMEs in Africa. 42 million of them are from Nigeria. So while Nigerian population is 18% of Africa, GDP 18% of Africa, can you believe that half of the MSMEs in Africa are from Nigeria? Yet we have all these issues about infrastructure, positive access to finance, all of this. It shows you that entrepreneurship is a latent competitive advantage for Nigeria. So you can't tax them away. You can't kill them away. We are having the lowest VAT, 7.5%, half. The average VAT is 15%. Some are 17%. We are having the lowest, as I said, but you can't use tax to finish them off. One strategy is to widen the tax base, which we are talking about. It's good, so that many more people come into the tax net. The other one is to reduce the leakages. Do you know that we have more money going into tax exemptions and tax waivers and then leakages than the revenue that the government is collecting? So the government is focusing on those. And I've mentioned about PIA going to bring double the revenue. So there are things the government is looking at to increase and triple the revenue to be able to relate to rest this issue about the vulnerability or the potential for liquidity crisis. And then also we haven't looked at assets. Assets are where you should be looking. The whole narrative around Nigerian debt is, they can't afford to pay, they're illiquid, don't give them more money, but the computer says something different. That's why they're all coming to give you the money. But when Saudi Arabia needed $25 billion, they didn't go to IMF or World Bank. They said, tell me the value of my Aramco. And they valued it as over 1.5 trillion. So, if I have that kind of money, give me 5%. It went to the capital market. We should be doing that with thousands of companies owned by the government. So we have to establish national asset register, we have to value these companies, and then we have to put them on the market or get investors based on their value so that government's borrowing is now based on assets. And it's changing the narrative, it brings more liquidity into the system.
Let me take this conversation out to Lagos. Coyote.
Well, thank you, Mark. Very interesting conversation, and I know that this will always be a big debate. Prof, let me start with you, really, because for a lot of Nigerians, they judge based on, the trend of borrowings they have seen. I mean, just when they are done or about to be done talking about this loan request to the Senate, they see another one, $4 billion. I mean, they were just talking about one, was it July or June, and just in April as well. So clearly this, I don't know, will be an ongoing conversation. And there are questions as to when this enough will be enough, as it were. Where are we planning to get to? But let me just begin my own intervention by asking you, in terms of sustainability, because that's also another question. People look to the future and say, what will become our fate in 10 years, 20 years, when we're no more and our children have to be the one at the helms of affairs? Will we be able to pay back? Looking at the budget performance just from January to May, we made 1.84 trillion naira, right? And about 1.8 trillion, almost all of it was used to service debt. So in terms of sustainability, I mean, major revenue comes from oil. Oil output has dropped to, 1.2 million barrels per day. Yes, the price of crude oil is about $70, $73. But I mean, you remember that we had 40, we were struggling with even below that. So in terms of sustainability, are you confident really that we can sustain this in 5 years or even more?
Well, I have to tell you that more debts are going to be coming. So that's not the end of it. But the question is the legality of this. The law says, well, actually, so far, it's captured in the, it was foreseen.
You have dealt, Prof, I think you have largely dealt with the legality.
And it was in the borrowing plan.
Prof, pardon me, I think you have largely dealt with the legality. In fact, you started on that note. But the sustainability, I've referenced crude oil production. We are doing 1.23, and you know what we actually benchmarked was way more than that. So sustainability now.
Okay, crude oil will only account for 50% of government revenue. And in the new dispensation, having sorted out the PIA, you've had the projection that from the FIRS that their revenue will double to over 10 trillion. So which means that, in fact, a lot more revenue is going to be coming. And with the kind of measures that I've outlined, where the government is now bringing a private infrastructure company, capitalizing it to 1 trillion, heading out for 15 trillion, that whole infrastructure that has been chastising all of us in terms of borrowing is going to be passed over to the private sector to manage. And that is where you're going to see a more efficiency scrutiny on these and better management and more confidence, because they'll be going to the market to support all that action. So we will be seeing the near end to this, but it's not yet. But don't forget again that one crucial issue is this. We are a nation at war in the 6 geopolitical zones. Many countries in the size of our conflict and security challenge would have been borrowing heavily. to persecute the war. And they would have imposed 40% war tax on the citizens. But we're not doing any of those. So we're just managing within our means. We've already identified the culprit. The culprit is government revenue. And we are saying, what's government doing about it? And there are a series of measures that are kicked in where government is heading to 3 times their current revenue. And I can outline those. Some I have already mentioned, but there are many things that they are doing because I happen to look into some of the committees where they are doing this. I can know what is going on, but there isn't enough time to talk about all of them.
I mean, it's good to have some informed opinion from you. It's quite good to have the informed opinion from you, and I think we'll lean on that a lot during the course of this conversation. But some of the assumptions you make, well, like I said, are assumptions. You've said that a lot of things will come on board, and then we'll triple our revenue. I mean, remember what happened last year? We had I would say, a great plan. Budget was passed quite early. COVID-19 hit, and we all know what came out of that. We're still trying to recover. So do we have a contingency plan? Because all these assumptions, who knows what will happen to the price of crude? Who knows how implementations will go? I mean, you understand this thing. So if we're basing our future on these assumptions, we don't pray for any disaster, but who knows what might happen to some of these projections we have made in terms of economic realities. Do we have a contingency plan? Again, can we sustain it?
I think I cannot write off the possibility that we can sustain the loan because of what I'm privy to. But having said that, nobody knew COVID was coming. But when COVID did come, there was a massive fiscal and monetary quantitative response. And that was why you had us jump out of it within a quarter. So you couldn't avoid borrowing in those circumstances. In fact, the minister said from the outset that her budget is going to be hit by 60%. But by the end of the 2020, we ended up spending more than what the budget was expected. So it's, we haven't seen the end yet, but there are more to it than we can share on this screen in the few minutes that we have available.
Okay, so Mr. Oluwade, I wonder what comes to mind when you hear Prof say, the borrowings will keep happening. I wonder how you interpret that. Earlier on, you said borrowing is not the problem, but hearing that this will keep happening. I know there are plans already for the 2022 budget and even how the borrowings will go. So the question is, when will it be too much, really?
Okay, the thing is this. We only keep focusing on the absolute quantity.
Prof, pardon me. This is for Mr. Oluwade.
Okay.
Thank you.
Yeah, thank you, Kayode. On the sustainability question, it is not sustainable. And why do I say so? In the MTEF, Medium-Term Expenditure Framework, fiscal strategy paper that the Finance Ministry sent to the Senate for 2021 to 2024 budget projections. It was stated clearly, that Nigeria was going to use 47.8, roughly 48% of its revenues in the next 4 years, that is beginning 2021, 2022, 2023, 2024, for debt service. So meaning, in layman terms, if you earn 100 naira, you're going to use 48 naira of the 100 naira to service debt. That is clearly unsustainable. And like I said, there are risks and there are implications of this risk. Now, one of the clear ones that we're seeing is that Nigeria is looking for money to meet essential services, critical services, education, healthcare, housing needs, and the list, goes on. Now, back to the issue of what is an asset and what do we need to borrow? Of course, I would not be surprised if more debt comes because, I think the National Assembly actually approved, maybe a sum of 24 billion thereabouts, for the executive arm of government, and they're just taking them in piecemeal. That's what you see they keep applying for, in tranches. So I expect to see this coming. My worry, like I said, is what these monies are being put, into use. That's what gives me worry because, there are alternative financing models, for infrastructure. Prof knows, I know, and some of you know as well, that why don't you get some of these critical infrastructure that we're, getting these loans to build? Why don't you concession them? get private sector investments to fund these assets, for goodness sake. Because that way, the private sector comes with their expertise, with their know-how, with their funds to do these assets, and then it's on a long term, 20, 30 years concessional agreements, and then they're able to recover their investments and then transfer the assets back to the federal government. Meanwhile, the federal government has the revenues to do what the federal government is, what every government is in existence to do. By law, the role of the government is the welfare and security of its citizens. The question is that, is the government meeting the welfare and security of Nigerians? Because if you have 100 million people living in extreme poverty, you have 23% youth unemployment figures, and of the 33%, 42% of that are youth unemployment. Of course, you're going to have the disaster that we have currently of insecurity everywhere. And then if you have unemployment, so what are you going to do? A responsible government, in my mind, should develop MSMEs, fund aggressive funding for MSMEs. And I also agree with what Prof said about, the PIA, brilliant legislation, and I think, but the trick or the deception is to think this is going to kick in 1 or 2 years. It's not going to happen. Even the implementation alone, the committee set up, they have almost 18 months to come on stream with the layout of how the PIA is going to work, the unbundling of the NNPC and all of that. So you don't expect anything meaningful coming out of the unbundling of the NNPC, the implementation of the PIA in the next, 3 to 5 years. But you can actually, like I said, NNPC, I'm glad it's going to be privatized or commercialized eventually. So, monies will begin to come in. It's going to begin to turn out a profit like the NLNG. I'm glad. So we can list the stocks of the NNPC on the stock exchange, and get revenues from that.
Well, the NNPC says that they have already started making profit.
No, that's subject to serious scrutiny. That's subject to debate.
Agreed, agreed. But that's what they have said. So maybe it does point to some potential, which you cannot ignore.
No, absolutely.
We also know that the implementation committee, I think, has 12 months to be able to lay out a plan in terms of how this is going to be implemented.
And then after that, begin the implementation of the process.
But from all that you have laid out, uneasy indeed lies the head that wears the crown at this point. Not very many easy solutions. We have to thank you, gentlemen, for coming and sharing your thoughts on the program this morning. I do know that this conversation on our loan and where we are with our debt profile is an ongoing one, and we will be seeking your insights certainly in the coming days. Thank you so much for coming on the program this morning, Professor Ken Ife, who is an economist, and Mr. Wale Oluwade, who is the CEO of Growth Masters Consulting, speaking to us here in our Abuja studios. Well, we're not going without taking your mails. Let's quickly take a look at a few of them. Famous Timilein says, talking about borrowings now, he says, borrowing is not bad, but it should be sensible. My people say that you can't be eating eba and you want to add corn or maize to eat in your mouth at once. We should finish with one loan before going for another. Uncompleted projects are everywhere. These trends should be worrying. Let's help this nation. That's from Famous Timilein.
Quite interesting illustration there, Famous. Well, next one is from Festus Akimboyewa, still on Nigeria's, on the economy, Nigeria's debt profile, saying the reality is that our debt as a country may exceed $45 billion by the end of this year because of COVID-19. Very weak economy and low revenue. FG must be given extra flexibility to raise revenue. Petrol subsidy is not sustainable and it should go now. Also, FG must sell all our non-performing assets.
Well, Henry, talking about democracy, says democracy, open governance, stewardship, and accountability seem to have different meanings in our country. A few weeks ago, a court in Abuja threw out a case seeking to enforce the provisions of Freedom of Information Act and described the plaintiff as a meddlesome interloper. Who, how, where, and when should citizens ask questions and get answers?
Well, Professor Enakena says the strengthening of our democracy comes with providing the greatest number of good for the greatest number of persons by a government that provides greatest number of egalitarian opportunities by a government chosen by greater number of persons. So I think that's a new definition of democracy. But I think it certainly covers the idea that it needs to work for at least, if not all, at least most people.
Okay, this final one, still on democracy strengthening, or the truth is that selfishness and lack of genuine vision of some of the elites in Nigeria are the major reasons why we keep growing, but we're dwindling in terms of development. That's from Olanrewaju Olalekon.
All right, well, we did bring you this news as we progressed. More civil servants were prevented from accessing the state secretariat in Edo State as a result of them not coming with their COVID-19 vaccination cards. So they were shut out of the state secretariat. So it's something that is developing. We're keeping tabs on that matter, and we will bring you more on that story as we get them. So you need to just watch this space, as we say. Well, there you go. That is it today on Sunrise Daily. We do thank you all for letting us be a part of your day. We will be back again tomorrow. I'm Chamberlain.
I'm Kayode Okikiolu.
And Maokwe Ogun Yusuf. Do have a lovely day.